financial year 2024-25 is crucial for salaried class from tax planning point of view. This month, you need to inform your employer about your preferred tax regime. Based on this, TDS will be deducted from your salary throughout the year. Let's understand why you should choose a tax regime. Let's see which tax regime will be suitable for which type of taxpayers. The tax regime chosen for a salaried individual will determine how much tax or TDS the company will deduct from their salary. Under the income tax law, the new tax regime is the default regime. This means that if an individual does not inform their organization about their preferred tax regime, TDS will be deducted from the salary based on the tax slab under the new tax regime. Not choosing the right tax regime at the right time can result in higher TDS deduction. It will reduce your net salary. However, salaried individuals have the option to change the tax regime at the time of filing their income tax returns. The benefit is that if more TDS has been deducted under the new tax regime, you can claim a refund if you invest in tax-saving instruments and then you select the old tax regime. A salaried guy should choose the tax regime after considering the benefits and drawbacks of both the tax regimes. In the new tax regime, tax rates are lower, but most exemptions and deductions available in the old tax regime have to be foregone. In the new tax system, there is zero tax on income of up to 3 lakh rupees, 5% tax on income from 3 lakh 1 rupee to 6 lakh rupee, 10% tax on income from 6 lakh 1 rupee to 9 lakh rupees, 15% tax on income from 9 lakh and 1 rupee to 12 lakh rupees, and 20% income tax is levied on income from 12 lakh 1 rupee to 15 lakh rupees. And last but not the least, 30% tax is levied on income above 15 lakh rupees. Speaking of other benefits, the basic exemption limit is 3 lakh rupees and there is a standard deduction of 50,000 rupees on salary income, and there is no tax on net taxable income of up to 7 lakh rupees. For those whose net income is up to 7.5 lakh rupees, the new tax regime is the right option because after you get the standard deduction of 50,000 rupees, your taxability becomes nil. When it comes to the old tax regime, for people under 60 years of age, there is no tax on income of up to 2.5 lakh rupees, a 5% tax rate on income from 2 lakh 50,001 rupees to 5 lakh rupees, 20% tax rate is applicable on income from 5 lakh 1 rupee to 10 lakh rupees, and a 30% tax rate on income of above 10 lakh rupees. After the rebate under Section 87A, there is no tax on income up to 5 lakh rupees in the old tax regime. There are more opportunities to save tax through exemptions and deductions in the old tax regime. In this regime, there are around 70 exemptions and deductions which reduce your overall tax liability. These include house rent allowance or HRA, investments under Section 80C or 80D, deduction in home loan interest under Section 24, deduction on education loan interest, investment in NPS under Section 80CCD subsection 1, and also in Section 80CCD subsection 1B. Opting for the old tax regime could be beneficial for those who utilize these deductions. Now let's understand the old and the new tax regimes with an example. Suppose your only source of income is your salary and you do not have any other sources of income. Let's assume your income is 10 lakh rupees. After the 50,000 rupees standard deduction, your income will be 9.5 lakh rupees. Then, after the health and education cess in both the new and old tax regime, your total tax liability will be 54,600 rupees and 1,06,600 rupees respectively. If you choose the new tax regime, you will get a benefit of 52,000 rupees. Let's say you invest 1.5 lakh rupees under Section 80C to save taxes. After claiming this deduction, your income becomes 8 lakh rupees. In this scenario, in the old tax regime, your tax liability will decrease to 75,400 rupees. Here too, the new tax regime seems to be better. If you have a home loan or live in a rented house, you receive HRA from your company, you can benefit from that as well. Suppose you paid 1 lakh rupees in interest on the home loan during the financial year. Now this can be claimed under the old tax regime. After you have made the claim, your taxable income will be 7 lakh rupees. Then, under the old tax regime, your tax liability will decrease to 54,600 rupees, which is equal to the tax liability under the new tax regime. To save more tax on a salary of 10 lakh rupees in the old tax scheme, your deductions should be more than 2.5 lakh rupees. And it cannot be fulfilled by Section 80C or standard deduction alone. For this, you may need instruments like home loan and HRA which will help you in saving more tax. If your income is up to 7 lakh rupees or if you do not have any tax saving investments, then the new tax regime might be better for you. However, if you utilize home loan, education loan, investment in NPS or HRA, calculate your tax liability before informing your employer about your preferred tax regime. You can use the tax calculator available on the Income Tax Department's website, incometaxindia.gov.in. You can choose a tax regime in which you will be required to pay less taxes.